Hey everyone, welcome back. We got another episode of the Veteran Education Series here for you guys, veterans talking to other veterans about business or finance or tax or whatever it may be, just us giving information for you guys free of charge, just to help you guys out as much as possible. You have me, Joshua Thompson. I help veterans with the tax and accounting aspect of their business. Then you have Chris Jackson. Chris, you want to talk a little bit about what you do?
Yeah, and I help businesses and individuals with financial planning and also in protecting their assets and loved ones. And so today we're going to be talking about one of those things, your business, and why a buy-sale agreement may benefit you and your business.
Yeah. So we'll hop right into it. Really, I know one of the biggest times, or one of the biggest questions people usually get first off, right off the bat is, Chris, what the heck is a buy-sell agreement, man?
Yeah. So buy-sell agreement it's actually a legal document drafted by an attorney that specifies exactly how a business should be sold upon the death or disability of a business owner. A lot of people think when they start their business that they automatically have that. They may have some type of loose language they got from the attorney, but it's not specified specifically how are they going to purchase that business and what's the funding method and what's the trigger for that. And so it's something that's very important. It can create a lot of contention in the family and in the business if there's not one in place, if there should be. So it's important to ensure the continuation of the business and it pays the expenses if the business owner dies. So regardless, the business is not going to, the idea is just like life insurance, how it replaces income. This is a tool in place so that you can protect your loved ones and make sure the business doesn't stop just because the business owner passes away.
Yeah, and it's extremely important. I know me and Chris were talking about it a little bit before we started this episode. We had a client in the past that we were working with, and he actually passed away due to COVID a few months ago. And he had several businesses, commercial real estate, all these items, all these partners. And when he passed away, there was no buy-sell agreement in place. So it was just the widow, the wife, they're trying to figure everything out, what's going on with the business. You had the business partners learning their new business partner and trying to figure all of that out and had no idea really where to go from there moving forward. So it's really important. You really want to have that guidance, especially if anything does happen, God forbid, but it's better to have it in place. But Chris, I know we talked a little bit about buy-sell agreements. Who should really consider getting a buy-sell agreement?
Yeah, so if you have a partner in the business that owns part of the company, you really need to look at a buy-sell agreement because neither one of you, I'm sure you nor your partner, want to be in business with your partner's spouse, right? You got the business to work with them because they have that expertise that's needed for that line of work. So if you don't have a buy-sell agreement, what's going to end up happening is your spouse still owns half the company. They have the ability to go to all the meetings and to be involved as much as possible. But the reality is they're going to still want income like their husband was there, and they're not producing value to the business as if they were there. So really, if you have a partner, you really need to look at a buy-sell agreement so that you both are funding on each other the proportional amount of value of your half of the business so that the spouse is paid off and will sell their shares of the business to the other business owner. So if there's a key employee, maybe it's your CFO, your sales manager, someone else that you would like to eventually have succeed you in the business. That's a great person too to have in that buy sell, because that's obviously if someone that you want in your succession plan. Make sure it's in writing and make sure there's contingencies if you die prematurely, because you might already have thought about what's going to happen in 10 or 20 years, but what happens if tomorrow he now needs to take over the business, he or she, right? If your spouse is the survivor of the business, you might want to even still consider it at some point, because what happens if something happens to your spouse? Who's going to take over after that? So having contingency plans is still very important, regardless of whether you're the sole owner or not.
Yeah, definitely. A great time to consider it. So now we know, we're in that category. We want to be safe. We want to consider it. We want to be the person having a buy-sell agreement. Is there more than one way to set up a buy-sell agreement? Do we have options when it comes down to setting up a buy-sell agreement?
Yeah, there is options, Josh, and there's some of them that are more flexible than others. The first one and most conventional is just an entity buy-sell agreement. Works really well with partnerships, the smaller, maybe 2-3 owner business, because the business owns the policies and it's easily controlled by the business. However, as there's more and more and more owners of the business that take more and more, smaller and smaller slices, it might make more sense to have a cross-purchase agreement where each one individually has more control over their option to buy sell, but it does take some control out of the business as a whole. So it's a little more complex, but it is another option just depending on the size of the business. And then the last one's a wait and see, is kind of a hybrid of the two because it gives you the option and the flexibility to decide, whether who's going to buy the business, right? It could be a specific business owner, but maybe they decide not to work there in the future. They decide they don't want to buy the business when time's right. And then their business can decide to purchase it. They could even, heck, you could even put it in a wait and see agreement where maybe a creditor is going to buy part of the business back just to help liquidate some of the assets so that the people that own the business can get some money out of it, right? And doesn't just go under. So there's multiple ways to set up a buy sell, and most important thing to do is to talk to your financial planner and your estate planner to really look at all of your options.
Yeah, and it's really important, guys. I mean, one size does not fit all. I hate giving this answer in the accounting and tax spaces. A lot of times it depends what works best for you. So definitely go talk with those professionals, find one, communicate with me and Chris. So we could definitely point you guys in the right direction to really determine which one of those is best for you. But all right, Chris, we have our buy-sell agreement. What are some ways we could fund this thing moving forward?
Yeah, so obviously the most basic way would be just through cash and revenue in the business. The problem with that is a lot of businesses don't have the kind of capital needed, especially when you're looking at a smaller, mid-sized business. If a company's worth, let's say it's $2 million, and each business owner's value is $1 million of that, do you have $1 million sitting around in the business to liquidate and to pay off the other one from your half of the business, right?
Yeah.
So that's pretty improbable and typically not what is done in the buy-sell. Sinking fund's another option, but the problem is it's based on investments and based on taxes. And as you know, Josh, taxes go up and down and things change all the time, right? So you don't want to have something that's uncertain, right? And then another idea would be, there's credit. If you decide, okay, we just can't afford those other two because we just don't have the funds, you can always get a loan from the bank, but they're going to charge you interest and eventually get to a point where you've paid well more than what the buy-sell was originally intended, just in interest. So it can actually be one of the most expensive ways to do it. An installment loan or a private loan is also the same problem. You have dependent on cash flow in the future and paying off that loan. So really one of the biggest or one of the most commonly used methods is through life insurance, because you can get a high amount of cash for a small premium in comparison, especially if it's term. However, if this is something that you're wanting to plan long-term and have be perpetual in the business, because eventually someone's going to die. That's the two things they're certain in life, right? Death and taxes.
Yep.
Exactly what me and Josh talk about every day. And so eventually someone's gonna pass away. So if you want it to be where it helps with the continuation of the business, a permanent life makes a lot of sense, because not only is it building some cash that can be capital if needed to be used while you're alive, but then if and when you pass away, you can also justify that was paid for by the person who's going to succeed. And so now that cash still doesn't have to come out of the company, even if it's 20 years, 30 years down the road. So having a permanent life plan on the buy-sell can make a lot of sense.
Yeah. And then, Chris, just to clarify, when we're talking funding, we're talking about in the event someone does pass away, or when they do pass away, the funding to buy out their portion. Is that kind of correct what we're talking about?
Exactly. So the attorney is the one that's drafting. So the term buy-sell is the agreement that's written by the attorney. However, the agreement does not stipulate how it's not funding it. It's just like in a trust, right? You can get a trust written for an individual, but if you have no assets, what's really going into the trust. It's kind of the same thing with the buy-sell agreement.
Got it. Okay. So I'm a business owner and, I really want to do a buy-sell agreement. What are some signs to me that it's like, okay, now it's time to do a buy-sell agreement, or suggest that I need to start doing or thinking about a buy-sell agreement? Do you have any signs that you could kind of share with us?
Yeah, so kind of like we talked about a while ago with LLCs, right? When you start getting to a point in your business where it's worth a decent amount, where we're considering things like protecting it from creditors and things like that. And that's kind of the same situation with this, right? As you're building more assets in the business, you want to make sure that you're having a lot of expenses that you need to have covered. So the questions I would ask, it's not really a specific number, more than if there's a concern where would you survive financially if, would your spouse and family survive financially if there was not a buy-sell agreement? What happens if you were to pass away, right? There might take some other planning tools, not just a buy-sell. However, that's a big piece of the pie. Another thing you could consider, would there be conflicts in the family, right? If we don't have a buy-sell in place, will there be conflicts with work? Will the business still be there in 5 years if I was to pass away tomorrow, not having anything in place, right? And would there be a rush to sell the business, right? Maybe it would be undervalued, and now your family, they're not getting the legacy that you were planning to give them because things were not properly put into place. That happens all the time on the individual side with a trust or an estate plan, right? If someone doesn't have an estate plan in place, a lot more money goes to the attorneys down the road because they're having to fix it later after the fact, where if you were to put a little more money into it up front, that could have resolved a lot of those issues. So really, if you can ask any of those questions and say yes to any of those, then that's a good time to consider a buy-sell agreement.
Yeah. And like I said earlier, you guys, the buy-sell agreement is extremely important. I was talking with the individual 4 hours ago now. He was a veterinary technician for over 20 years. This guy's probably in his late 50s, and he finally had a company that he's been working on just take off. They're doing really well for themselves, making millions of dollars when they went from making like $40,000, and they're doing really well for themselves, but he doesn't have a buy-sell agreement in place. And this is one thing we kind of just touched on briefly when I was talking with them. And he's like, we'll figure it out when this happens and when that happens. But he's really adamant about leaving something for his family. He's big on family. And I was letting him know, like, hey, you need to get this taken care of or thought about ASAP before, something does happen, especially with COVID going around and, the business is no more. So it's definitely important to have that buy-sell agreement, especially like if you have partners like Chris was talking about, and ask yourself those questions on, is it time for me to do a buy-sell, or suggest to start thinking about a buy-sell agreement. But really, the last kind of thing was, any final thoughts, anything you want to add in there, Chris, on anything maybe we didn't touch on? Obviously, if anyone has any questions, feel free to just drop them in the comments. Me and Chris would be reading these comments live and replying to the comments, or at least messaging you guys personally, depending on how specific the question is. But feel free to go ahead and drop those in there. But Chris, do you have any final thoughts or anything you want to add at the last minute?
Yeah, the one last thing I would just comment is want to consider, if you have a buy-sell, reviewing it, right? Things change, just like an estate plan. So if you have a buy-sell agreement and it's 5 or 10 years old, it's been too long since you've evaluated. Your company's grown or shrunk, or people have changed. So you want to evaluate it, and also whenever there's a life-changing event. So a divorce, changes employees. So I would say, it's best practice to look at it, maybe talk about doing a board meeting at least annually, and then maybe to get involved with your attorney every couple years, a few years, whenever things are looking like they've changed. So that's just my final word, is to make sure that you're updating that and not just letting it sit.
Yeah. Oh, well, Chris, appreciate that. Appreciate everyone kind of being here, joining us, watching the video, the information on the buy-sell agreement. We enjoyed your guys' time. Like I said, put anything you guys have in the comments. If you guys enjoy the video or you learn at least one thing, we just hope that you guys either like it, comment on it, just shoot us a message if you have any other questions. But other than that, Joshua Thompson with Thompson Tax Group, and Chris, if you want to just kind of any last minute words before we head out.
Oh, Chris Jackson as well, Cambridge Financial Group. So have a great rest of your day, everyone, and we look forward to talking to you all soon.
All right, see you guys later.